We believe that wealth is a journey, and that this is your jumpstart to trading success. Hello everyone, and welcome to another edition of the Trader's Mindchat show, where we believe that wealth is a journey and that this is your jumpstart to trading success. I'm Mike.
And I'm Melissa. And wow, what an amazing show we have for you. We have legendary hedge fund manager Jim Roppel coming back on our show today.
Woohoo! Can't wait to talk to
Third
Jim.
time, right?
Yeah.
This is third time coming on.
Third time Jim is coming on. We'll see if the third time is a charm for markets, because every time Jim has come on, the markets have been in chaos. Right? Like so the first time Jim came on was, I believe it was in March of 2020. And that's when the market was crashing, right? Like right in the middle of Corona and all that fun stuff. Then Jim came back on right before the election, presidential election last year. And market again, choppy as anything. And here we are again, end of February, and the market is starting to pull back hard. A lot of leading stocks just kind of fell off a cliff. And we'll see if they bounce.
And it was February 23rd, right?
Yeah, February 23rd. So if you're listening to this, you're listening to it a week later, and you'll get to see if Jim has also had the effect of coming on the show, which is within a couple of weeks, the market miraculously takes off. So we'll see if Jim's magic touch works again.
I hope so. And just for you, in case you don't know about Jim's background, he built his career mastering the art of buying and holding monster stocks. He's been featured in books such as How Legendary Traders Made Millions and Monster Stocks by John Boyk, as well as How to Make Money in Stocks, The Successful Stories by Amy Smith. He's also launched a webinar coaching service with our good friend Adam Sarhan. It's called GrowthStockMentors.com. So we're so happy to have Jim back on.
Yeah, absolutely. And in addition to all that, he's just a real sweetheart of a guy. Like, gives back so much and a true expert. Like, I've learned so much from studying Jim over the years.
Yeah, so we're going to be talking about how to ramp up your success by hearing some of his tips for you, but that's going to come on in a little bit. But before that, we're going to kind of talk about something that's been pretty important to a lot of traders, and this is about how to prep for your week. And one of the things that Napoleon Hill and Think and Grow Rich, I finally got this book after Mike yelling at me for this past year.
Yelling at you?
Not yelling, but being like, how have you not read this book yet? I finally picked it up and started reading it last night. I was up till about midnight reading this amazing book where Napoleon Hill interviewed countless millionaires and billionaires such as Andrew Carnegie, and was able to find out a formula for success. And I'm only on the first principle so far, which is desire. But he basically says that you could visualize success, and there's 6 practical, definite steps that you can do to be able to take that what you desire and transmute it into financial success. Okay. And the first thing is fix in your mind the exact amount of money that you desire. And I think that, Mike, you've already done this kind of homework, so it's like he said not to be vague, to be definite about like what that number is.
Yeah. So I went through the book. A fantastic read. Highly recommend it to everybody. I think that one of the important things in doing these kinds of mental exercise, for any kind of mental exercises, it's you're gaining clarity by going through and doing all this, right? So fixed amount, this is what I want. Like, it's not just thinking and hoping like, I want $1 million, I want $10 million or whatever. That's great. But then it's also starting to think about, well, what am I going to do to get it, right? I think that's the next step. Mm-hmm. Like, what are you willing to
determine exactly what you intend to give in return for the money.
Right. So nothing comes for free, right? Like, what effort are you going to put in? It's just like if you're going to the gym, right? Like, I want to be a bodybuilder. Great. Like, well, what am I willing to put in? Well, I'm willing to sit and watch a bunch of shows about people working out, but I'd rather just sit on the couch and eat potato chips. Like that's not going to work, right? So it's what am I willing to give to get what I want? And so that's going to require focused effort for a meaningful period of time to get X.
And this has been one of my issues where, I want to do so many different things, but the truth is, like, you can't do so many different things well. You need to have focus in order to get there.
Right? We were actually talking about this before, and you didn't like the word sacrifice.
No, but I still don't, because there's so many wonderful things that I want to do, and especially with the show and with my writing career, that's so hard to choose just one. And I think that's where you were telling me that sacrifice is not a bad word if you're looking at it in the right way.
Well, yeah, I think that we can achieve many of the things that we want to achieve. But, it does require focused effort, and you can't focus on everything, right? It's kind of like a paradox, right? Like you want to do everything, but you could only get it by focusing, right? So that's where sacrifice comes in. If we're sacrificing other things temporarily, right? Like not forever, but if we're applying focused effort to one thing, it's kind of like turning a lump of coal into a diamond, right? Like you don't have to focus on that lump of coal for eternity. Eventually, that focused effort on it turns it into a diamond. Great. Now you have your diamond. You could move on to the next lump of coal that you want to turn into a diamond. So it's that kind of principle.
Okay. So I guess once you have established that, establish a definite date. That's what Napoleon Hill says. Assign a day that you are going to possess this money that you desire. So it could be a month from now, 5 years from now.
And that's another thing too. I think that coming up with realistic dates is important. To bring it back to trading, I've met and spoken to so many traders from all over the world, and whenever I hear I want to, this is going to be my year. I want to make $1 million this year, or I want to have 10% returns every single month. That's great. That's all fantastic goals. When I want to do it this year. Okay, where are you starting from? I've never traded before, right? So is it realistic to go from being a beginner to being one of the best on the planet in the span of a year, right? Probably not. I live it. In my mind, anything is possible, but what's probable? And to Napoleon's second point, what are you willing to sacrifice to get there? So you can potentially become one of the best traders in the world, but what are you willing to sacrifice to get there in this time span that you're giving yourself? So in that kind of time span, 100% effort for the entire year. You're doing absolutely nothing else aside from trading for that year. Are you willing to give up friends, family, your day job to accomplish these things? Because given what you want to achieve in the time span that you want to achieve it is going to require significant effort. Oh, well, you don't want to give up all that other stuff. Okay, that's perfectly fine too. So now you start to adjust, right? Maybe not a year, but maybe within 3 years, 5 years, I want to become consistently profitable where I'm generating an income for myself, and this is going to be a real thing. Okay, that's a lot more manageable. That's what I ended up doing, right? When I finally turned the corner with my trading, and it was I was finally serious about it, and I was giving focused effort. I was doing it part-time. I wasn't sacrificing our relationship. I didn't quit my job immediately. I was doing nights, the weekends, and studying and giving that kind of focus to developing this craft. And over time, you develop the skill and you achieve what you want.
And I love that you mentioned that story, because it kind of reminded me of the one in Napoleon Hill's book about R.U. Darby, who ended up becoming a very...
Are you who?
R.U. Darby. That's his name.
Okay.
I'm sure it stands for something. But basically his uncle, wanted to get rich the fast way and went out west. This was back in the 1800s with the gold rush, and went out there and he struck gold. And he called, are you? Get your butt out here. We're gonna go dig for gold. And so they, bought all this equipment and they started digging and they found a couple of gold ores. But then there was nothing. It was empty, and they tried like figuring out like what just go a little deeper, and there still was nothing. And they just gave up. They sold the equipment and went back to their lives. But the person that they sold the equipment to, wasn't so dumb. He was like, let me hire an expert and let's see what we can find. And what Aryu and his uncle didn't realize is that there are fault lines, which the expert was able to figure out. And just a few feet away from where they were digging, there was more gold. How crazy is that?
Yeah. I think there's a lot of memes that are based off of that, right? Like where you see the person like digging, and then they quit like a few feet before that they strike gold or diamonds or whatever. Like.
I know. I just can't believe that. And I think that it really taught him a big lesson. But that's why I think he was so successful in his career as a life insurance salesman, and why he was able to then recoup all that money that he lost from that initial loss with the gold. But it is really one of those crazy stories that if you are on this career path or for trading and you do fail or you maybe have a significant loss, do you give up, or do you maybe seek that expert or seek that help that you maybe didn't have initially to help you get where you want to go?
Yeah, like you don't want to end up with like a bunch of half-dug holes all over the place, right? So in that story, it kind of sounds like they found something, and then they dug a little bit more, like there's nothing here, let's go dig a hole somewhere else. And that's very similar to trading, where let's say you have somebody that's new to trading, right? They start trading, they have some initial success. All right, great. Then, the market conditions change, and then they stop having success. Oh, well, this isn't working anymore. They toss the methodology, and then they go off and they try something else, not realizing that they may have had something incredible, but because they didn't thoroughly understand what it was that they had, that they end up tossing it and that they don't succeed. Whereas had they gotten to some help, gotten to some expert advice, gotten other people around them that maybe know what they're doing, then they could have continued to dig on this idea. Ray Dalio talks about something very similar in his book Principles. He talks about having a meritocracy of ideas. So basically he wants to triangulate, get like 3 different experts that are willing to disagree with one another to give him feedback on an idea. And from that, he's able to step away with the best analysis of this trade, this investment, whatever it happens to be. And if we do that, then, or if the person does that, then they'll be able to find greater success and have, not only that, have more staying power with something that could end up making them a fortune.
Oh, wow. And so back to the book really quick before we move on, is that whatever this is that you are desiring, whether it's through trading or through your career or a mixture of both, is to put it down on a piece of paper, write down a statement of what you intend to acquire, the date, what you're going to do to give back, and being able to then read it out loud twice a day. So he wants you to, recommends you do it right before bed and right when you first wake up in the morning, so that it's fresh in your mind, and actually visualize yourself with that money. Let's say it's $100,000. I see myself with $100,000. What am I doing with that money? I have security for my daughter. I have, I'm able to get maybe that car I've been, dreaming of, and you're actually driving it. So he's laughing at me, but this is what he says. Napoleon suggests that you do. I know this is hard for some people.
I think that to me, the bigger takeaway there is you're saying it out loud, and you're you're hearing yourself say these things, right? And so it's not just something that's in your head. You're not just reading it casually and tossing it aside. Like it takes some effort to speak these things aloud, and then you're hearing your voice saying it. So it's like planting that seed every single day, twice a day, and when you're planting that seed every day, twice a day, like it has more of a chance to grow.
Mm-hmm. So I guess similar to meditation, like you're constantly,
Yeah.
saying this particular chant or whatever it is over and over and over again. So I guess it reaches that so it kind of reaches that subconscious level.
Yeah, and that's part of the idea.
Very cool. So to find out more about how we can continue to turn these desires into reality, we have Jim Roppel joining us in just a minute, right after this word from our sponsor.
Today's episode is sponsored by the Mara Mindshift Guide, a trading beliefs workbook. Trading is a mental game. This workbook combines 20 years of trading experience with simple, easy to follow exercises to help you manage your mindset and move past limiting beliefs. Get your copy of the Mara Mindshift Guide today on Amazon or at marawwealth.com/mindshift. Welcome everybody to another edition of the Traders Mindchat Show. We are back today with, and Jim is going to beat me up again for saying this, but trading legend Jim Roppel. Melissa and I were talking earlier, and Jim has this knack for coming on the show in the midst of market chaos. I think the first time we spoke was in March of 2020, right in the middle of the crash. And then we spoke again right before the election. And today, well, what a wacky day in the market. But a couple of weeks after Jim comes on the show, it has this miraculous ability to just drift back up to fresh highs. So maybe Jim has the magic touch again. Jim, thanks for coming and being here with us today.
Dude, you kill me with this legend talk. Like, I don't feel like a legend after dude, I have a crypto fund and 2 equity funds. Today was the largest absolute dollar amount I've ever lost in a day. And on the 20, 30 minutes in, I could hardly see straight, but I hope I'm a signal and we get a good rally. Today looked really quite a support day. I mean, volume really came in. So, yeah, it's crazy day.
Yeah, well, I have Market Smith fired up on the other screen, and we're ready to get into it. Today we also have Melissa with us. She's a co-host of the show, and and Melissa's going to be handling the Q&A.
That's right. So if anybody's any questions, feel free, put it in the chat and the Q&A section, and I'll be able to ask Jim later in the show.
Beautiful.
Oh, awesome. So, I'm curious how you handle markets like this, right? Because this is such incredible whipsaw in this, and you're one of the most positive guys that I've met, especially how do you, when you see that the market and your position's getting slammed, what's going through your head?
I really kind of detach myself from the dollars.
Okay.
If you count the money, a day like today is going to just break you in half, and I'm in a great mood. Like, this was like the Super Bowl. Okay. This is what I live for. Like, I'm alive when the market rocks. I mean, I don't love losing money, but I love the dynamics of the market and the Fed and the cycle change, the come out and play stocks are all ripping. I love the dynamics of the way the market interacts with all the changing everything. And so the losses, it's part of the game. It is a game. It's a very serious game, but it's the greatest game ever. I love playing it. I live for this. And so, yeah, I lost an enormous amount of money today. And yesterday I lost a good bit too. But guys, this is just a tiny little hiccup. Okay, now maybe this turns into something more severe, but at this moment, it's just one play in a football game. Okay, we're in this for the long pull. Like, and I so strongly want to stress this. It's time to compound. It's not timing. I can guarantee you a lot of people who were in wonderful stocks vomited them all over the place. Now, I want to back up because I want to answer your question really directly. How do you handle a day like today?
Yeah.
Being prepared, saying, my God, it's so obvious that the market was wildly extended due to this Fed insanity. I mean, this printing is so crazy. Technical analysis has been changed by the Fed. You cannot expect bases to base out 5, 6, 7 weeks or a multi-month cup and handle. The Fed is, so when the Fed is creating a 2 weeks tight is your best opportunity to put a position on, risk is through the roof. So everybody who, pays close attention and knows history should have been hedged, at least partially. And when the market gets wildly extended, you just have to hedge. Now, I had the largest hedge I'd ever had on ever last week. And the market,
and how are you hedging?
I was short a massive amount of deep in the money calls. And I'm sorry, I was short a massive amount of deep in the money calls, and I was fooled. I let myself, in my deep knowledge of history, start to believe that the 21-day was real support. That's lunacy. Okay, that's just not reality. I've been doing this for 30 years. You know how infrequent it is that stocks hold the 21-day, let alone the market? Ding dong here was hedged beautifully, and I took it off on expiration. I didn't reload it. So I came in, I was obliterated. I was on margin. I still am. I did trim a modest bit in the first 30, 40 minutes this morning, but very small. And I came back, like thunder. Like, well, everyone saw the market. Still at a down day. So being prepped, okay? If, don't get fooled. Don't let the market trick you and lull you into complacency that all of a sudden you're going to start to believe the 21 days is going to hold. That's crazy talk. So be prepared. No history. And then this morning was climactic. Okay, the mid-afternoon when the VIX broke like 23, that was like the fear popping. The VIX has become such an incredibly important tool. I mean, it's really, for this insane market, VIX is critical.
Which screen is the VIX on?
It's over here. I mean, I don't like timing. I'm talking out of both sides of my mouth, but I have an intraday, 10-minute bar chart on the VIX when crazy days like this happen. Normally, I'm just looking at it as an overall prognosticator or a temperature of fear for the population. And I mean, guys, we closed the VIX at 2238. That is crazy high. The public is mostly in bonds. They're very, very fearful. Sovereign bonds around the world, 3/4 of them, I think, are negative rates. That is epic fear. So watch the VIX. Maybe don't watch it intraday on a crazy day like today, but don't make timing your big thing. Sitting in monsters is how you get rich. This may go on all day.
Jim, you mentioned the fear. So how do you combat that? Like, how do you not get swept up in the fear that's happening around the world when looking at the markets?
Well, okay, it took a lot because I used to be very fearful. When quantitative easing started in Europe, I became global macro focused and wrong. I was overly fearful, but I detached myself from the fear and from the money. Money is the loss of money is what causes the fear. You're really afraid of losing your money. And if you give up on that, if you can't care about the money, I actually think you honestly need like a disregard for it. And you got to recognize that you're going to go out to dinner. I'm going out to dinner tonight with my best friend, his wife. we're going to have the best of everything. Nothing changed, not a single thing. So I have tranquility in chaos. But you can only achieve that from distancing yourself from the love of money, the need for it. That will cause you to puke every time. If it's too dear to you, you'll get risk off. There's risk off is no way to get rich. Okay, risk off that's kind of cavalier. You have to identify the general trend. The trend is still up. It's theoretically still up on a short-term basis. Okay, this was not a panic. You shouldn't have panicked. How is that a long answer? It's my best answer.
No, I love that, the tranquility and chaos. I absolutely love that. I think that's something we can all strive to get to.
Look, I work on it all the time. I mean, I saw my shrink this morning. I took an hour out to teleconference with my shrink, and I just said, I'm gonna do this. I mean, meditation. I have to wire myself down. I have to calm down and think critically. The Fed is not backing off. We're going to see a $1.9 trillion stimulus plan come to fruition. We're seeing rotation. This was a classic panic open. And I did a podcast last night for Growth Stock Mentor, and I said, if the market opens up tomorrow, I think the bottom could fall out. But I said, if the market opens, if it gaps down, there's a chance of a bottom. Now, I honestly thought this correction would last a bit longer, maybe days more or weeks. And I think we saw this in, 2 trading sessions. It's very theoretically possible that this could be over. And it was a Monday. Monday panics, you really want to try to hold as much as you can on a Monday panic and wait for that Friday close. The Friday close is so much more important. Plus you had Powell speaking, who was like, the soothsayer. He just calmed everyone's nerves, said, I didn't listen to him, but I'm guessing he had to have said, the Fed will be there for you. Okay. There's a lot going on today.
So there's to start to have that detachment from the money. It sounds like that the coaching session with the shrink, meditation. Oh, what else do you have to? What other advice do you have to start to have that detachment from the money?
Know where you are in life and what's going to really change. If you lost let's say you get a train wreck and you lost 10% of your account today, are you not going to eat dinner tonight? You put it in percent. Let's just say you did lose 10%, it's one day. Now, if you fold up your tent and you give up when the pain comes in, I'm not saying don't cut your losses, but I'm saying there will be people who will never, they lost a ton of money today and they're going to be gone for a while, maybe forever. It's the people who double down when the going gets tough. A lot of people quit and they're doomed to be a loser. If you quit, you can't win. Okay. Staying with it, knowing history. I have seen this. I've been in the market for 30 years. I've seen this over and over and over. Now this Fed insanity has injected a turbocharger because they build up such speculative short-term excess that when it pops, it's brutal. But then the Fed comes out and says, I'm guessing everything's chill. I'll listen to the comments. I didn't hear them today, but so I'm confident the Fed is going to be there until they're not. Now, when they're not, well, there's one other thing. I have this strong opinion that the public is the long end of the curve is going up because the economy is opening up again. In the economy, we're going to have an epic boom. I can't even believe they're going to throw gasoline of $1.9 trillion onto a rocking economy. Like what's possible to happen with our GDP this year? You think interest rates are going up for no reason? That's going to cause people to dump bonds. They're going to start the public has bought bonds in the greatest bond binge ever, greater than the 2000 to 2003 binge. They're going to sell them, and they're not going to money market at 0%. Where are they going to go? Crypto market can never absorb the trillions of dollars in the bond market. It's going into stock. That's going to go on for years. This is a replay of the 2000 bust again. Look, the stock market cracked on the internet bubble bursting in 2000. The public, as they dumped stock, bought bonds. They're one of the longest bond buying binge ever in history. So they're dumping stocks as they're getting cheaper and better, and they're buying bonds. Right when the stock market turns up, interest rates went up 14 times in a row and slaughtered the public in bonds. And the stock market took off and went to Mars. It's exactly what's happening again. I think it's starting to turn out that way right now. That's why I have confidence.
So if you were comparing this period to that period, well, where are we? Like, is this like 2000 and what? 2003. 2000, yeah, early
03, late 02. I'd have to look at a chart, but how about just after the bottom?
Wow.
I mean, look at money inflows, guys. We've had net outflows by the public for years. This isn't going to top until people are coming in for $25 billion a month every month for 2 years. Where's that bond money going to go when rates are going up like mad? Because we're in an economic boom, which is about to have the Fed gasoline dumped on that. You know what the Aggie bonfire is?
No. Well, what's that?
The Aggies, the Texas college team, they wrap hundreds of telephone poles with wire, 3 stories high, and they throw gasoline on it, and it's like a pep rally. It's a story bonfire. They stopped doing it because somebody got hurt very badly a few years ago. But just imagine the Aggie bonfire. That's the economy. It's the boom we're seeing. And here comes the Fed with a missile semi-fuel truck that's about to drop missile fuel on it. That's the 1.9 trillion we're going to see, coupled with the public liquidating bonds and putting that in there. This is going to go on. We're in a super cycle. We just had a minor interruption with C19. So this is 2 days. I'm looking way down the road. 2 days, people are assuming this doesn't turn into an intermediate term correction. You're not even going to be able to see this on a chart.
Freaking incredible perspective. And that's one of the reasons why I love having you on and having you on semi-regularly at this point. It's a great reminder for the audience and myself too. So I really appreciate it.
So I'm wrong. What if I'm wrong? I just said a lot of words. I used a lot of words to articulate my point, my perspective, but I'm ready to reverse course completely. If this doesn't, this starts to get worse, I'm going to adjust. I'm a trend follower. I'm not a blind optimist. I mean, I'm a major optimist, but I'm mostly I learned to totally secondary to my opinion on the future. It's secondary to the trend. The trend will always keep you in line. The trend is always right. Price is right.
Yes, absolutely. And so let me clarify too. It's not that you're bullish on longer term and that part of the conversation. It's the perspective part. To take that step back, look at the bigger picture. Like I think that's such a great mindset to have. And to be present with it, and to be able to bend like that tree in the wind.
Look, think about, let's just say you totally choked and you vomited up all your stock and you're out and the market's regained the 50, volume was great, and we got a great support day. How old are you? Subtract out 100 years, and every 3 to 5 years, you're going to have a bull market. If I lived to 100, I will see at least 5 secular bull cycles. Or cyclical bull cycles. We're in a secular bull cycle now. If you screw one up, there's just going to be, you think humans are going to stop inventing things? Really? But by the time you're my age, there'll be cars hovering on the street and people will be routinely going to Mars and Venus to figure out how women operate. I mean, that's a joke. But I mean, the innovation, humans are innovative people. They're just not going to stop. They'll never stop. They want to find a better way. They want to improve their life. And those ideas are going to come out and go public and we're going to get to invest in them. Lean bullish. Unless we're in a severe downtrend, always lean bullish, be risk on, optimists prevail. You know, I heard Chamath Palihapitiya say, sometimes people kick ass and they get the gold star and then they go like this. They're so afraid of losing their position or their stature that they go risk off, and then they stop compounding and they get defensive. That's no way to go through life for me. I acknowledge bear markets, I get out and I stay out, but 3/4 of the time the stock market's going up. Lean bullish into disruptive technologies and you will change your life.
I love it. I love it. So, an idea that I wanted to try to dissect is your trading prep for the day, week, month. And I know that you've spoken about this before, in pieces here, in on other shows too. But I really want to get into like the prep of you wake up, you roll out of bed, and then it's the mindset component of it, right? So like, walk us through
the type of toothpaste you use, you know.
yeah, you know, that's a big part of success.
Crest anti-tartar like the rest of the public. I don't know. You know, the real routine in the morning, first of all, I don't roll out of bed. I lay in bed with a couple laptops and I try to get up, and I have my morning ritual. That's all my alerts pop up on the screen. It's like, you know, look at your prep for the day. You know, what's your biggest obstacle for the day? Get that done first. Eat your, you know, take your vitamins. I have green protein drink, and then my trainer, and meditate. The market prep is all done the night before or on Sunday for the ride the wave plan, the battle plan. In the pre-market, I'm reading research, upgrades, downgrades, fundamentals, earnings. But the biggest thing I do is I watch the tape for gaps. I'm not really, my routine, it's not like I'm not screening in the morning. I screen at night, every night, and all on Sunday. So I know pretty much what I'm going to do almost no matter what. Now I had to shift gears massively because I wrote this insanely bullish report on Sunday night for Ride the Wave plan, because I started to believe the 21-day was just going to hold for eternity. Like we were never going to retest the 50 again. The market, I deluded myself. The market tricked me. So I wrote this bullish report, and then I had to change gears immediately as the day progressed. So I'm aware of fluidity of situations and I adapt fairly quickly. So my morning prep is not morning prep. It's the night before prep and Sunday prep. I'm all on fairly autopilot morning, Monday, Tuesday, Wednesday morning, and every morning.
Interesting. So the evening prep, well, what's the evening prep?
Okay. You know, I'll sort through every index, my watch list, about 400 stocks. And I must acknowledge, I do watch the bond market. I watch the 10-year, 30-year, you know, the bills. And I saw the burst. I saw it burst. And I even wrote about it in my Ride the Wave plan. But then I didn't really connect the dots to, my God, people are going to start to shift in the short term. And I was caught off guard by the bond market. I have it in there with the currencies. I watch all the currencies, because what I'm really watching that for is Armageddon, because I do think this Fed printing is just like, it's painting the Fed into a corner. The markets in the globally are addicted to the heroin of quantitative easing. Now, I don't see how they're going to get out of this. So I'm watching currencies and bonds for the end, like for a debasement of the currency at some point. I mean, so I'm the biggest optimist in the world, but I'm not a moron. I understand that's possible that could happen. I mean, that's why crypto is going to Pluto. Okay. I mean, well, it's a disruptive technological innovation on top of a major Fed put. But in my prep on Sunday night, I didn't focus enough on bonds, and bonds were the key to this break. And that's, you know, so what? I look at all the indexes. I look at all my leading stocks. I really look at my positions. I don't do quite as much group work during the evening weekdays, but on Sunday, I'm sorting for up to down volume, leading relative strength line, especially in down markets. Okay. I have a screen. It's called 2020. Every variable there is, pre-tax, after-tax, ROE, sales growth, earnings estimates, earnings beat or surprise, 20% or better across the board. That screen alone is going to divine you straight. You know what a divining rod is? It will point you straight to the top 15 stocks in the whole market. I mean, right there. So I'm fishing in a very, very rich environment. Now, Eric Kroll did a study a few years back, and he proved something along the lines of 40% of all stocks that are leaders have no earnings. And he's right. That is a fact. But the volatility associated with no earning stocks is so high in a lot of cases that it's not palatable for me. So I tend to shun those. I don't want to. And when liquidity dries up in markets, it dries up first in no earnings growth stocks. So it's a high risk to have 40% of your account in no earnings growth stocks, and your volatility goes way up. Smaller cap stocks, no earnings just ramps your volatility through the roof. So depending on what you can endure, how far away from my ritual?
No, your tangents are among the best that I've heard anywhere. So you keep going.
My family and friends don't find them so interesting. I'll tell you that.
Everybody here does. All the people that are logged in and all the thousands of people that are going to be watching this on YouTube next week when it goes live.
Fire me up on another. Tee another one up. Let's hit. I'll continue on prep if you want, I suppose, or whatever you want.
Robert just said your tangents are the best. Let us not keep you from diverting from that.
Yeah. Okay. Your bottom line, have your ritual on Sunday night. And back a million years ago, when all the charts would be FedExed to me on Sunday, I would spend half the day on it. And I found that a lot of real professional traders were doing the exact same thing. And stocks would break out on Monday morning like crazy because all the pros were looking at these chart books on Sunday night, identifying, and that doesn't happen quite as much. So breakouts now occur through the balance of the week as opposed to big time on Monday. That was because everyone was doing their Sunday work. And I just have continued the deep dive on Sunday. It just works for me.
Oh, very interesting. So how about part of the monthly prep? Like we're almost towards the end of the month. Like at what point are you doing things like post-analysis and reviewing trades and like is that something that's continuous? Or are you doing it like on the end of the month? Like what's that part of the game like?
I do a poor job of post-analysis at the very end of the year. I certainly don't do it on a month or quarterly basis, but I have because I run hedge funds, I'm very concerned about my partners coming in with new money. And I don't want to take a big drawdown right as a bunch of people put new money in. So quarter end, I do maybe cling to my gold star and not be quite as risk on because I don't want to bury these guys. So say you're up 80% for the year, 20% for the year. Those people are elated, but a new guy comes in and he could draw down 5%, and the guys who've been in for 10, 20 years could care less, but the new guy's down 5, 10, 20% right off. And so you see a lot of that type of professional money management activity going on. But a big thing is quarter end here, tax money is going to be due. So last year was a huge up year. Say you made $1 million last year. Do you have $400,000 sitting in your checking account? Probably not. You're going to the sell. Part of this could have been the beginning of tax selling to pay taxes. I mean, it's a little early, but there's a notable Eric Kroll once again did fantastic research and has proven this happens. So I'm on guard for that. I don't do a ritualistic quarterly tune-up though. I keep myself on the guardrails every night, little subtle guardrails every night.
Very interesting. I'm going to have to meditate on that point. A question that came in last time from a couple of members and a few different people were to detail, to find out more details about your deep in the money call hedging strategy. Can you walk us through an example or two and like the mechanics and that kind of stuff?
It's generally best to hedge what you own, but sometimes so anytime a stock I have gets historically extended over the 50-day, especially in the recent history of the stock, if it crests when it's 30% over the 50, I want to start selling calls in the money down to the strike price will be at the 50-day. And I'll sell about a third to half I'll cover about a third or half the stock with short calls because I'm not positive it's going down. And I don't want to cap off 100% of my upside. So, and then the more it extends, the more I'll sell. And lately I actually started to sell calls around the 21-day because half my stocks were 40% over the 50-day. I mean, you got to understand the magnitude of the uber power of this Fed. It's unlike anything I've seen in my whole life. It's never been. Back in the day, I used to say, well, stocks have a hard time holding the 50. The 50 is so far below. You've got to understand what your heat is. What is your drawdown going to be like if everything corrects to the 50? And can you withstand that? And if you can't withstand that, you better hedge or trim. If you have a very small account and you can't sell 100 shares, trim off 20 shares of stock, 40, 50 shares. Hedging allows you to keep that really low cost basis stock. You never want to dislodge. Cushion is the most underrated leverage tool you have. It allows you to sit when things get ugly. If you're always in and out and you're jumping around all the time, you're on a razor's edge. You were wiped out of everything. If you're a swing trader, you were blown out of everything. And your cost basis is what? You're starting all over again. I have some stocks that were leaders and some that are becoming leaders, but I've got good cushion in all of them. I can sit, I can think, I can walk away from my desk for an afternoon and look every other hole of golf I play. I don't live on a razor's edge.
All right. So back to the deep in the money call. So you are selling a third to half of the position, or that, yeah, like, so let's say you have 10,000 shares of a stock. You would sell, well, what is that about? Like maybe 50 calls.
500. Or 50,000, whatever. I'd sell calls to cover half the position.
Yeah.
And the more it goes up, every couple 2-3% more, I'll sell more calls. I'll never go 100%. Unless we're in a wicked bear market, I'm not going to go 100% hedged because I always think they could go higher. But sometimes the indexes get really extended and your stocks may or may not be. And then I'll sell calls on the index. Like I'm using the ARC funds because it really mirrors my portfolio very well. They're not the most liquid options in the world, but you have to get the delta right. You have to get 1 for 1 with what you own. You don't want to hedge the S&P if you're long Roku. Okay. You have to hedge what's comparable to what you have. And so it's best to hedge the direct stocks you own. Then when the index gets wildly extended, like, 6-7% over is historically pretty high. But in the Fed craziness last year, we saw the NASDAQ was 13% over one time. I think the highest it's ever been over in history was 22%. And I do see cycles where Eve did a research study where she proved that levels of extension trend over years. So in speculative periods, it will trend higher, 7%, 9%, 12% over 3, 4, 5 years, and then it'll ebb and flow. So knowing where you are in that cycle and history is critical. Now, coming into this year, you just had to tack on 10, 20, 30% of expansion above the 50 because of the lunacy we're in. This is lunacy.
So you sell the deep in the money call now, and if price doesn't drop below the 50, like let's say you sold at the 50, it doesn't get there, continues to rally, then that stock is getting called away from you.
No, I'll take a loss on the calls. Look, stocks don't go to Mars. I mean, that's a embellishment.
Unless if it's Tesla.
Gravity's real in the stock market. Look at yesterday and today. A lot of times I'm selling extremes. Now it's rare, but they will get out of control. But I almost never sell in a bull trend. 100%. I never cover the whole position. But a lot of times, this is beauty, is when the stock goes dead tight, straight sideways, and the 50 comes up to it, then I'll just cover the call. I don't care. I'm trying to dampen the volatility so that I don't have days like I had yesterday and today. Guys, I'm not perfect by any stretch. I mean, I bogeyed up yesterday and today pretty bad, but I'm not giving up for anything. This is the beginning of 30 years is less than half my career.
So Jim, what is your main advice for anybody who did have a major loss today? Is it just to stick it out, or what would you say to them?
If you never give up. If you want to change your life, you don't give up. You stay in the game. Injured, bruised, you get the smelling salts and get back on the horse and go. If you were ever fortunate enough to see Bill O'Neill live, I have 30 years of notes. It's literally, the stack is this deep. I'll just tear into those and reread them. I mean, it take a long, long time. I'll double back. I'll recognize what I bogeyed on, and I'll read the notes, and it's all in there. If you don't have Bill's notes, you go to his books. You go to Reminiscence. Just reread everything you need. If you bogeyed up here, all your mistakes are covered in those 3 books. Darvis's book, Livermore's book, and O'Neill's book. Take a break. One of my friends was an epic bond option trader, and the first week on the job, he had a monster bad week, and they said, "You're out for the week. You need to chill. Go." And he went to Pebble Beach and played golf for a week, got his composure back, shook it off, and came back and went on to be one of the most epic 10-year bond option traders ever. You extract yourself from the chaos, calm yourself down, get comfortable with the loss you took, tighten up your whole operation, realize what you did wrong, and re-implement. And maybe on a smaller scale, get your confidence back. Listen, barring the death of the golden goose of capitalism, the market will be coming back every time. Now, you might not be in a secular bull market. You might be in a cyclical bull that'll ebb and flow. Like, the Dow didn't break 1,000 for 20 years, from 64 to 82. But there was still an ocean load of money to be made in there. So the market will always present opportunities. Like, we have to, the rotation, this epic rotation we're seeing. You should be, I think, looking at copper stocks. If you can pallet a Disney or some of these, like I went after Snap today, loaded up on that. But the market has shifted. The stay-at-home stocks are going to cool off. They've had their cycle for a while. Long answer.
No,
Never give up. I mean, never. Don't seal your doom of being a loser because you quit. Be a winner. Stay in the game. Stay risk on, and be disciplined. And you'll always be. Look, if you cut your losses all the time, you'll never have problems. You're just going to be in the game. That's why I'm here for 30 years. If you cut those losses, you will always be there. You'll always be in the game. And if you don't, that's how Livermore blew himself up over and over again. Too much leverage and not cutting losses. Debt is at the bottom of most disasters. Over borrowing.
So when would you, a lot of people roll their stops up to get defensive. When would you do that? And what might be an example of something that's maybe, too aggressive in your opinion?
I'm doing everything I can not to execute an order. So I'm going to give them, once I'm ahead, I'm going to give them every opportunity to succeed. I mean, I'm looking not to trade. I want to be forced into it, like by an absolute obvious monster break of a 50. Now, where are we in the cycle? Where is the Fed in its cycle? That's going to govern how I cut my losses on the 50-day. You want to pay a ton of taxes, trade a lot. Okay. You don't want to pay, you want to get rich, you want to compound out, you don't want to give your money to the federal government to waste on silly programs. It's time, not timing. Use the deep in the money call selling to hedge. If the VIX is super low, you can buy some puts, I suppose. In a bear market, you have to pull the ripcord and get out. But I'm so far off track, I can't even see.
No, it's all good. Well, I know we've got a lot of questions coming in from people. Melissa, what do we got? Well, what are some questions from the audience?
We got a lot of great questions for you. One is from Mike. He just said, do you know what O'Neill meant by in the market, there's the quick and the dead? He thinks it means to exit the market quick if the market looks bad, like in the last 2 days. Do you know if that's what he was talking about?
Yeah, I think Bill's style adjusted dramatically as he aged. I think he went from being a much more active trader to a less active trader. I mean, I know because I had his trader and I would put orders in and I'd bounce him off because they had to fill mine first. And so I kind of got to know what was going on a little bit. He was a much more patient than I was. I was very impulsive early on and I traded a lot. So he evolved. I think everyone evolved. I would suggest that almost everyone trades less with time. It's just the nature of what you can move around as far as how much you manage and your level of patience and your recognition that compounding takes time. You can't compound out if you're not sitting and if you're paying a ton of taxes. So Bill early on said quick and dead because I think he traded a lot. There were periods where Bill was extremely aggressive. And then, look, there's people who know this way better, who worked with him side by side, who know better than I do. But that's my interpretation of Bill. He evolved from a shorter term trader to a longer term trader. But when he was young, he sat with Pick and Save for a couple of years. So there's different styles for different markets, I suppose.
Okay, great. What technical indicators do you give the most weight to?
Relative strength. It's just overwhelmingly. Now, this brings up a very good question. All these opening up stocks have low RS or lower than the leaders. So are you willing to buy an airline with a 65 relative strength when I only really want to be in stocks that have a 90 RS? So maybe you should really start to weight more the trend of the RS as opposed to the actual raw number. But I always today there was a gambling stock I saw was recommended and I looked at it and I said, well, why wouldn't I just buy Penn? It's already in the sector that's evolving and it's already known. Why would you screw around with Win? Okay. I always really RS quite simply, but you have to kind of maybe a definition of making a killing is identifying a stock that it has low RS that's about to become high, catching a turn, but that is also telling a stock where it's going. And I don't like to do that. And you'll almost always find that the real leader has RS before the others in the area. So RS, how about that?
That's great. Adam Schwartz asked, that you said that there are many bases that are shorter due to the Fed. Can you give an example of a recent position you took this year and where you bought it? Are you also initiating at basis or on pullbacks?
I'm such a persnickety guy. I'm a purist. It really takes a lot for me to deviate. Why deviate from a guy who made more money than any human really ever needs? And he's written 33 books on it and he spoke endlessly for 30, 40 years on it. He said 7-week basis. Okay. I had such a hard time chasing this market with new names, but I didn't have to chase them because I bought them right around the follow through day and I sat. I think one of the reasons I wasn't hurt worse was I didn't chase a lot of things in these short bases. But the market trained people to accept the shorter bases, and maybe people adjusted, but they got their comeuppance in the last 2 days. An example, I didn't buy a lot of them. I just didn't buy a lot of short bases. Look, why reinvent anything? Do what the Japanese did. Just knock off everything everybody else invents. Why reinvent the wheel? There's a lot of really smart people out there who've done anything you want to do and written a book on it. Don't chase short bases. Starting a new position, a full position on a 2 weeks, 3 weeks tight is asking to be kicked in the face. You better be cocksure that you know exactly what's going on and still be ready to be blown out. Those are excellent places to add stock, but not start new positions. So I'm not going to give you an example because, I mean, there was a billion stocks that had these crazy short bases, and everyone's like, well, they're ascending bases. They're ascending bases. What they were short bases, and they got crushed in the last 2 days.
Yeah, I saw a lot, like maybe only a small handful that qualified as like a true ascending base. Like PDD seemed like one that was an actual ascending base, but a lot, like aside from that, yeah, like there were flaws in many of the patterns.
My buy list every week was just smaller and smaller and smaller, and I actually kind of was saying to people, well, if I have to give you an idea, this looks okay, but it just doesn't conform to a great entry for a new starting position. You know, I think Bill said, you know, there's the quick and the dead. There's the people who sleep when bear markets occur or big pullbacks, which set up these wonderful bases. I think it's the consistent application of your diligence and attention is much more important than the quick and the dead. Okay, I mean, well, on a climax run, sell them. That's the quick. Okay, there you have to act quickly. And I know Bill acted quickly in those occurrence periods. But when you're building positions, you don't want to monkey around too much with short bases. So that's a long answer to, I don't have a lot of good examples.
I hope, Adam, hopefully that was helpful to you. But I know that's some great content there. Daniel Miller asked a very interesting question about how you should treat accounts of different sizes. This past year, he grew his account from 200,000 to 700,000. He's wondering if he should change his position size or how many stocks he should consider holding or the types of stocks he should be holding.
First of all, double kick ass, broski. I love that story. And that's like, you can do that when you're engaging in smaller stocks. And, you know, I did it too. When I had a small account, I did that. I levered up big and I was a cowboy. I was a kid. I was 30 years old. I didn't have a family. I didn't have a ton of responsibility. And I was okay going backwards, like losing a lot of money. You know, I was willing to take that risk. At 700,000, you still can be extremely nimble. If he's proficient at it and that risk, he can sleep well, doesn't cause him anxiety or consternation, you know, I would continue on. I would suggest until you get to $3, $4, $5 million, you know, 700,000 is a lot of money. I'm super happy for him. From 200,000 to 700, he's a life changer. That's what you're in this for. But he's not. I think you can continue to trade concentrated. It's still liquid. You know, you have 200,000 worth of stock. You hit market sell, it's gone. He's not trying to offload hundreds of thousands of shares that takes forever. So I would tell him to continue along as long as he can tolerate that volatility. You know, until you get into the millions, several millions, you can put your whole account in 4 stocks, use margin. That's really, really cowboying it up, but that's how you can change your life when you have a small amount of money. I'm so happy for that dude.
It's such a great success story. So yay. Adam also says you are a legend and you have inspired him to crush it. So it has come from other people's mouths that you are a legend, Jim.
Listen, I make more mistakes than anybody else. Okay, do not misconstrue the fact that I make more mistakes than I have successes. I'll bet you my whole career, I've had like 8 or 9 stocks that I've lit it up on, but I've bought hundreds of stocks. Most of those gains came in 8 or 9. I'm guessing. So a legend is, let's just say, let's call me persistent, endlessly persistent. Anybody who applies themselves as much as I did, I suggest will do better. I'm ADD. I am dyslexic. I am a one-trick pony. My friends call me a one-trick pony. They go, you're only good at one thing. Now, one guy adds, it's a pretty good trick, but so I don't like the legend thing. Anybody can do what I did. It's not a secret. It's written about endlessly in books, but people give up. They don't follow the rules. They don't have the discipline. It's when things get really hard is when you have to double down on your efforts. I don't mean double your position size. I mean focus and stay with the legend is, let's just substitute for persistent, endlessly persistent.
All right, great.
I've got a follow-up question to that. So how do you internalize the rules? Like, it's one thing to read them from somebody else that's done it, but making them your own, how do you like internalize it so that way you're like it's in your being to follow this?
Conditioning. I've touched that hot burner so many times. I've broken every rule more than 5 times, and you learn from you internalize it when you lose. Like there's a kind of a maxim. It's like the wise man learns from other people's mistakes. Well, if you don't lose or feel pain, do you really learn? You learn, parents tell their children, don't drive drunk or don't smoke weed or don't. From experience, they know these are bad things. But until kids do it and learn from their pain, do you really learn? How do I learn? I learn because I've had my ass kicked everywhere, every which way. I mean, but coming back from these poundings, you talk to somebody who's been trading for 10, 20, 30, 40 years, and they've been profitable somewhat consistently. They're going to tell you horror stories of the stupid things they did. And if they don't, they're lying.
So then the key to stay in the game is what is it? Does it have more to do with position sizing? Is that part of what's going to keep you in?
Yes.
So that way you could make these mistakes and still.
You position size. I watched a brilliant hedge fund manager put 45% of his whole account in rack space 10, 15 years ago. He had an epic career going, multi-millionaire, deca-millionaire, and he blew himself up. When Rackspace blew up, his fund blew up.
Jesus Christ.
Position sizing. That's discipline. This is really basic. Okay, I mean, I don't ever talk about cutting losses because it's just a job one. It's like a zero defect policy. There's getting rich and staying rich. I don't take 50% positions anymore. I don't think I'll ever do that again in my life. I'm not so insanely risk on. I am holding on to that gold star a little bit, but I'm trying to dial in the matrix of being risk on, but being prudent. I don't want to go, I'm willing to lose. I'm willing to lose multiple trades in a row, small, 0.5% of equity, 0.5% of equity, 0.5% of equity. A 1% equity loss due to over position sizing is just greed. It's really, especially when you get more advanced and you've made a bunch of money, you just don't want to go back. Making your first couple $1 million is not easy. You dial it down. Look, you know how much money you can make with a 20% position that doubles? I mean, how many do you need?
Yeah. Bitcoin already made my year, so I'm pretty happy about that one. And,
that
Melissa, what else we got?
Question from somebody about Snap. Was there something about Snap today that you really liked? I know you said you bought that today. Can you give a little bit more insight as to why you loaded up on that particular stock?
Well, it just was, yelling at everybody.
Oh, you know what, Jim? I've got MarketSmith up over here if you want to highlight some stuff.
Well, pull up. I mean, dude, this is going to jump right off the page at you.
You want a weekly, a daily? Well, what do we look at?
Daily or what? Look, the daily. First of all, look at the volume on the earnings report. Okay, it explodes up on a great earnings report. It goes fairly tight. The market has a brutal 2-day correction. It barely flinches. It has a massive outside day, closes at the high on thunder volume, non-earnings related. That is clear institution. I bought 195,000 shares, and I bought it late in the day. I did not buy it early. My associate Eve, who runs a small fund, who's way smarter than me, I think was buying it most of the day. Dude, the thing jumps off the page at you. Anybody who's looked at charts guys, the market was down brutally, and this thing started going up. It broke, it was one of the first to go positive. It was also supported by those censorship bad guys, Twitter, and pins went up, and social media. It's like, I think Jerome Powell whispered, the Fed's going to start buying, social media stocks today. I don't care why. People were asking me, why'd you buy it? Fundamentally, what changed? I'm like, I could care less. Somebody way smarter and way bigger than me knows, and I'm just a parasite on their world. I'm agitating them by jamming the stock up while they're trying to buy millions of shares. What did it trade today?
How many shares? 75 million.
Yeah. Okay. 75 million when normal's about 20. Now, 300% pickup in volume is thunder, but when you're already trading thunder volume, it becomes way harder to have the percentages greater. If a stock trades 200,000 or 300,000 a day, it can easily trade 1.5 million and have a 5, 8, 10x volume day. But when you're trading 25 million shares, you really, really need gang tackling by gorillas to drive a stock up that kind of volume. This was obvious.
Looking at it now, absolutely. And I'd like to ask a follow-up because this is something that I struggle with, and I'd love to get your help on it.
I have to call myself out as being a liar.
What was
That's
that?
a short base.
Oh yeah. Yeah, those short bases, man. You got to go all in on them.
Overwhelming power. Look, there are special occasions. Rules are not meant to be broken. It's like a child. They say, "Hey, I want to sleep over at X so-and-so's house." And you say, "No, you've got to, whatever." And please, special occasion. Special occasions occur once a year, twice a year. They don't occur every other day. You can't break rules every 20 minutes. That's lack of discipline. Sometimes when you see overwhelming power, you have to get involved in spite of the higher risk of a short base. Now, we just had a wicked shake. This thing cracks out, and it's the true social media comes on. It deserved to be bought. So yes, I violated the rule. You got me.
All right. That actually wasn't the question I was thinking of, but I'm glad that you gave clarity on that. That was still good. My question is, you're buying this close to the end of the day, so somewhere in the ballpark of where 70, 69, 70, somewhere like that. But even so, so the question is more around if you're buying it, let's say that you did get in at 70, the bottom of the day is down at 56.83. That's the low. The 50-day moving average is 15.7%. Actually, no, the 50-day moving average is 27% below where we close. So where are you placing your stop if this thing comes back in?
It's a very good question. I probably will not. I will open up my stop a bit. I won't sell any of it down 3%. It's going to have to come down 3, 4, 5. I'll start selling it there. I mean, I always want to honor the max loss. Like if I have a 7% loss, that's too big. In a case like this, it potentially could happen, but the power here is suggesting that's less likely to occur. I don't think I'll take it down to the top of that base. It would probably be an exception, a rule breaker if it did. So I'm willing to open up my risk a little bit here. And if it took out yesterday's high, it'd be a little concerning. And here's the thing, I'm not going to make an all or nothing decision on this. I'll leak some out. I'll leak out 10, 20,000. I'll sell a bunch. I'll sell whatever and see what it does. As my orders are filled and the action that occurs will dictate. Everybody out there, not everybody, anybody who's not institutional has a massive advantage of not having to lug around giant size. But one thing I can see is when I let rip with a block of stock, does the market take it real quick or is it hard to get rid of? I gain knowledge by who else is involved in the stock and how big they are by how my orders fill. So that's one minor advantage. I'd much rather be a smaller and anonymous, but the answer is my loss I would accept will be predicated on how my orders fill and how the stock is acting. I really have turned to a dimmer switch. There's 10 notches. I like actually 11 because of the Marshall lamp, but I want to go 1, 2, 3, not 0 to 11. I'm not doing that at all. I'll work with it. I'll treat it how it treats me.
Mike, any other follow-up questions about Snap?
That was an amazing answer. What else you got from the audience?
It sounds like some people might be a little confused. If you don't have this on your radar, do you recommend a service, or how do you track when these stocks are?
Yeah,
do you know of any great services, Jim?
I heard there's one called MarketSmith. I kind of did not tell. There's a alert window. I have my favorite screen that I run is up on volume. So I'm looking for stocks that are up on volume almost every day. That is where I pre-market gapping. I get a lot of good ideas, but when you see volume coming in, you've got, I don't know if MarketSmith can do this, but Wanda, I have like several up on volume screens I can run. And my alert window, I sort my window by volume percentage change for the day. So I know where the action is on that alone. That on an intraday basis, that is my go-to. It's the most valuable part of Wanda. It is I couldn't live without it. My performance would be so much worse without that. It points you right to the leaders, or I should say, it points you right to stocks that are under accumulation that day. Now, based on what you know about them and the fundamentals, you may get a continuation of that. So if MarketSmith has volume up screen, it's your absolute go-to.
This is a follow-up to that. For your up on volume screen, what is your criteria, and how much up on, I'm sorry, you meant to say deep ITM calls not out of the money. Does that make sense?
No.
I guess, what is your criteria for up on the volume screen?
I don't know if I can't hear you or I just can't interpret what you're saying, but
that's okay. Yeah, I think it was a little convoluted. So let me go to a different one. Raymond from the French Riviera is asking, what is your long equity exposure right now for larger or smaller than before the open?
I probably picked up, I picked up exposure. I expanded exposure. I'm probably in the vicinity of 130% long, which for me is really long. But this market, I wrote in my Ride the Wave plan on Sunday night, there are so many stocks acting great. You could justify 200% long. And then I put the caveat, if you can accept that kind of risk. There was a period of me running this hedge fund, both, whatever, and I didn't go on margin for a couple of years, not at all. We are in rare, you could title this whole conversation Fed policy, Fed quantitative easing, the heroin the Fed is injecting into the world is changed everything. The hangover is going to be horrible, but so Fed policy, the rotation we've seen, the bond market is critical to understanding money flows. The sentiment of the public is still crazy fearful. Those, if I was to bracket, frame this whole conversation we're having, those are the variables. Those are the long-term critical variables. For me to be 130% long is pretty out there. Like, I know you guys are probably calling me a weasel, but I don't have to make a killing anymore. I'm happy.
I have a question for you. What challenges you now that you have grown in your craft, you have, reached a certain level of success? What is what does the market do to challenge you, or what do you look to hopefully accomplish in the next few months?
Well, I love it's the greatest game in the world. There's no better game. There's mentally stimulating and challenging. For me, it's the interaction of interest rates, policy, weather, innovation, sentiment, public opinion, emotion. All of these variables meld together to give you price. And if you interpret them properly, it's so unbelievably rewarding. It's amazing. Like I'm divert. So I do it to get the game right. When I do on the occasion, once or twice a year or once or twice every couple of years, I get it all, lined up, all the stars aligning, and and then you bet it. I don't just talk about it. Most people talk, but when you put your money down and you're at risk and then you're rewarded, the overwhelming feeling of being right after applying all the variables, it's the most intellectual stimulating. And then when you're right, the reward of all your hard work and your confidence in backing it up. I mean, I could never understand the rush of a rock star. I mean, as great as it is being right here, imagine walking out onto stage and there's 100,000 people and they sing along with you as you command them. And what's that rush like? How could possibly anybody understand that? I could barely understand the rush from this. Why do I do it? I do it I lost a fortune today. I'm happy as a camper. I am alive.
That's awesome. And I love your passion, Jim. You can just see how much you love doing this. Like, it just comes across. I'm sure everybody watching sees it or feels it from wherever they are in the world right now. Kieran actually re-clarified for us. So the question again for Jim is for hedges. Oh, no, I just lost it. Oh, hedges, by selling deep ITM calls. The question is, how many days to expiration are these calls typically? Do they expire in 1 week, 2 weeks? Depends on market conditions, etc.
Definitely depends on market conditions. Usually 1 to 2 weeks. I'm usually selling, I feel that the excesses I'm trying to dampen will work off within 2 weeks. Now, occasionally, like I have Trade Desk and Zoom from March of last year that I just don't want to pay the tax on. So I'm just hedging the crap out of those things. Now, I did unwind those hedges. Okay. So I'm really, those two stocks, I'm just trying to push them to the 1 year tax break. So I hedge for different reasons. Most of 90%, 95% of my hedging is predicated on an excess in expansion from the 50-day. In this case, it's Kufi environment, sometimes the 21-day.
Okay, wonderful. Thank you. And what would turn you bearish and get off margin and maybe even into cash? Would it simply be the performance of your portfolio or the action of the indexes and leading stocks?
Well, we haven't talked about Tesla. And Tesla is, without a shadow of a doubt, the canary in the coal mine, is the leading stock. Tesla doesn't have to go up. It could base for a year, but Tesla cannot implode. If Tesla's the North Star right now, the Fed and Tesla.
Yeah, here it is.
If the Fed whispers taper, you could rest assured I am going to trim stock. The Fed is the backbone of this market. The captain of the market is Tesla. The leading stocks, if we start to live like many leaders broke the 50-day today, but they mostly closed above. If those stocks start to crack down below and living down there, or the market does, that's going to change me. Like I changed from Sunday night to Monday afternoon a lot. And now I changed again today. This is more changing for me this is really unusual, but it's a goofy market. So Tesla is ill. It is not feeling well. It has a bad stomach ache. Now it did recover greatly today and the volume picked up. Am I looking at this right? So it's not a total disaster, but it is, significantly off the high. It's meaningfully below. This is a broken stock. Okay, so go back to March. It never broke the 50. It didn't just break the 50. It broke it wickedly bad. This stock is in spite of today's action, this is a bad omen. I think the best you could expect out of this right now, there's a 10% chance this stock rips back above the 50-day and re-engages in the bull market. There's a much greater probability that this stock just digests for an enormous period of time. It could digest for a couple of years. I don't want to tell it where it's going, but those are the probabilities. Okay, this stock needs time, a lot of time. This is one of the worst breaks we saw. I mean, in a quality name, there's a lot of junk that we'll never see again that broke. But so that's an answer to the general market. What does the market do in the coming days around the 50? There's also a chance that the Fed is so overwhelmingly powerful that we just blow off here. It's not unthinkable. I mean, that's in the cards.
You pay more attention to the S&P or the NASDAQ, or do you weigh them all equally?
I weigh the NASDAQ more. I think you could use ARKK. If you're really trying to make money and you're in leaders, ARKK is going to be, now it's not an index, but it is a proxy for the names that I'm invested in. These are the disruptors. I'm looking for those innovation disruptors. The S&P is loaded with financials, which have been, oil, financials, basic materials. Those aren't really innovation. Now we are seeing a reflation trade coming on strong in that area, which is really could dampen your volatility greatly. But, those stocks earnings peak when the stocks are peaking. Those stocks take off before the earnings materialize. They're cyclicals. Financials with low interest rates are just choking. DeFi, crypto is destroying traditional siloed, centralized banking, bricks and mortar. Like the fact that banks have physical structures is going to be a thing of the El Paso. So no, I'm not really paying attention to the S&P. I weight that 10%.
All right.
We've been questions. I'm sorry.
No, I was just going to say, Jim, we've been going strong for about an hour 15, and we want to be respectful of your time. What do you think?
I'll just take a few more.
Okay, let's do it.
How many do you have?
Oh man! Well, we've got a packed house. We'll keep you here until midnight.
We do 15. Do 15 more. I do have a meeting and dinner to go to, so 15 minutes.
Okay.
Is that okay?
Yeah, absolutely, appreciate it. Thank you.
We'll do let's say 4 to 5 more. But this should be good. So Dave McKay asks, do you use a time stop as well as a price stop? A breakout that just goes sideways for a long time, for example?
It's a very good question. I tend to be very patient, but if a stock just doesn't get going, I will probably start to leak out of it, even if it isn't too materially below the 50 or, I want to give these things every chance to succeed. If just because a stock isn't doing anything doesn't mean it's bad. It just means it's the market's focusing on oil today or something else. And even for a period of a week or two, now if I'm underwater on it, that's my first to go. So time and underwater is very limited. But if I'm ahead, I will really, really try to sit. Now, I'm probably, that is a strength, but it's also a weakness. I give them too much room occasionally, and then I might not be allocating to a more powerful leader. So yeah, I use both for sure. Time, both of them. Can I tell you one thing?
Yeah.
Patience. Mother Teresa and Gandhi, I call sometimes stocks that are wonderful stocks. They have Gandhi days. Gandhi was a dick to a counter person once in his life, but he's a wonderful human being. Mother Teresa swore at somebody one time. She yelled at a cabbie. She did everything else right. Great, great stocks have Gandhi days. They get slammed. Some big fund lets rip with 1 million shares or 2 million over a couple days. Nothing wrong with that stock. It just had a Gandhi moment. And so it'll just turn and come back. If you can't sit through a Gandhi moment, you're going to miss every major monster run, because every one of them has a Mother Teresa day. I mean, the greatest person in the world is a dick sometimes. No one's perfect. No stock is perfect. Every stock is going to shake. And so this kind of goes with the question about time. Patience keeps you in a stock that's going to triple. If you can't withstand Mother Teresa's bad outburst, you are not going to be in the 200% gainer. So there we go.
That's like the quota of the day, the Gandhi moments and the Mother Teresa days.
Don't be a dick.
This is definitely going in the highlights.
Yeah, that's the show highlight there. Don't be a dick.
Or learn to tolerate people. You want a great friend. They are going to have bad moments. If people, I have a million flaws. I don't know how people tolerate me, but they do. I mean, it's kind of like you want to have a great friend. You're going to have to tolerate. Not everyone. Stocks are like a relationship. You have to tolerate some bad behavior occasionally, within reason. Have respect for yourself. But
wonderful. This question, we'll take two more. So this question is from Sal. He asked, do you hedge with long puts against your short calls?
In the bear market in March, I did, but I was so overwhelmingly, initially I was wrong. I thought C19 was going to be nothing. My associate Eve was dead right, and she went out early. But when I started to recognize the significance of what was going on, I was short calls up the butt. And in the middle of it, I just started outright buying lots of puts. Not lots, but NVIDIA, I had thousands of them. Yes. How about yes?
Okay.
It's in an extreme situation. Only in an extreme situation like a bear market.
This is a funny one from Robert. What's the best and worst part of your golf game?
Chipping. I'm the worst chipper. The best part is when I make a bogey or a double bogey, I stay in the game. I don't give up. I saw Fred Funk play at my club, and he broke the club record. And I just recognized that the guy was smiling all the time. And then I saw an interview with Richard Branson, and he was smiling all the time. And I started to find this correlation between smiling and being happy and success. And I also recognize some people I know who are really cranky all the time, and their life's been like a failure. I've never met a successful pessimist. So me being optimistic when I'm having a rough patch, smiling, look up at the sky instead of the ground. I try to play the top 100 golf courses in the world. And some of these are the most beautiful locations in the world. And I'll be with somebody who's in one of the most epic places that no one can go to hardly. And they're having a bad round, and they're looking at the ground. They're walking like this, I'm like, look up. It's a beautiful sunny day. It's unbelievably beautiful here. You're somewhere where no one else can go. And you missed a 2-foot putt and you're now going to wreck the balance of your game. My best part of my game is remaining positive when the shit hits the fan.
I think that's a great place to throw it back over to you, Mike. What a great message for everybody.
Yeah, I think that's it right there, and it carries it into how you trade and view life, and clearly why you've been so successful for so long, and it's something that we should all aim to adopt.
I've had periods of success. I've had periods of non-success. I struggled for 2 years.
But you've always had a successful mindset.
For sure. But yeah. But my worst period was when I became too negative. So I learned from that. When that early 2013, 12, 13, 14 period in there, when the central banks were ramping their balance sheets, I thought there was, really, really a bad period coming. And I let myself get negative. And that proved to me not to do that. I want to go backwards. I want to expand on that. A guy named Ravi Batra wrote a book called Bankruptcy 1999. And I read it, and it talked about the twin deficits, the budget deficit and the trade deficit. And when you read the book, it was like super logical. Like there's no possible way we're ever going to get out of this. And the US will be bankrupt in 1999. Hence 2021, it didn't happen. But when I read that, it really influenced me. And I learned from that experience from a very, very wealthy relative on the other side of the family. I had dinner with him and I explained the situation to him. And he was a big optimist. And he said, Jim, American exceptionalism, entrepreneurialism, innovation, we'll figure this out. And he was right. And although I do feel this quantitative easing right now is going to end horribly bad, I think I want to refine that and say it has a possibility to end very badly. But I think there are possibilities we could grow out of it, inflate a little bit out of it, or maybe a combination, innovate out of it. Don't ever count the United States out. We kill the incentive to earn, to work, to innovate, more socialistic policies. And this quantitative easing is socialistic in nature. These are very, very bad things that are corrosive and cancerous that I'm on guard for. But I'm going to remain optimistic and follow that trend, baby.
Amazing. Jim, any closing thoughts before we let you go?
Oh, wait, where can people find you? That's a big one. I know people are like, if they want to be mentored by you, what should they do?
Follow me on Twitter, which is uptickin, optimistic. It's not down ticking. I think I'm upticking. And follow Blockware Mining, Blockware Solutions. But you want to learn about crypto. My partner, my consultant in crypto is brilliant, young, understands it so much better than me. Helps me with everything. Sam Schwarens. I butcher his name all the time. Can you post it up on the site for me?
Yeah, absolutely.
I'll give you his Twitter feed. Follow him on Blockware at Blockware Mining, Blockware Solutions. Follow me, Growth Stock Mentor. I have a service. I have a service, right?
I was going to remind you, Jim, about this thing.
On Mondays, I talk almost every Monday after the close, and I'll answer all your questions, kind of just like this. And, Bill inspired me. Bill O'Neill really, initially, he didn't know who the hell I was for a long, long time, but I eventually talked to him many times, and I was a big,
there it is.
I bought a lot of their products, and I got to talk to him a lot. And he spent a lot of time teaching me. And that's what a lot of caddies that I play, caddy for me, asked me, will you teach me how to trade? Can you help me? And I would have these guys in here, sometimes 3 caddies at a time. And as my time became more compressed and this other hedge fund I have to run, I don't have time. So I thought I could see hundreds of people all at once in 1 hour and open it up to 1 million people. And a lot of people go, Jim, why do you charge? And I'll tell you why. If you don't have skin in the game, you're not going to invest in the process. I used to have a pile of O'Neill books, and waiters at restaurants would go, hey, will you teach me to trade? Next time I'd come in, I'd bring them the book. So I'd go back in a month later. I'd go, hey, did you read the book? Like, oh, it's in the trunk of my car. If you don't have the fortitude, the desire to spend $12 and buy that book, you're not invested in the process. People who, it's cheap. It's $100 a month. If you're not going to blow $100 a month, you're just not serious. And I don't want you listening. I want people who are serious with skin in the game. And by the way, I give every nickel and much more so away every year. So this money will go, it's not like, I'm not doing it for the money. How about that?
It's beautiful, Jim. Yeah, so we've got Growth Stock Mentor up here. We've got Blockware Solutions.
Kick ass. That's my man, Sam. Sam and Mason.
And so definitely go check out both of those.
I want to tell you this. I want to close with this. That's us on Father's Day playing golf. And the man on the left is Matt D'Souza, who caddied for me. He caddied for a million people, but forever. He started caddying for me when he was like 13. Got the Evans Scholarship, CPA, like a finance degree and a MBA. You know, the guy going through college, straight A student. He was from below average means, disadvantaged. He taught me that people are not meant to be equal. They're just not. He was so driven. He drove me like a dog. You know, I used to go out to the paper depot at midnight to get the Investors Daily the day before. Mm-hmm. He embodied that spirit. He was driven like crazy. Everything was, we are going to go now. We are going to do this. We're going to open this crypto fund. We're going to do this together. And he drove me to expand it. He drove me to invest in ICOs. And then after that, he opened up Blockware Solutions, where he became the largest cryptocurrency rig broker in the United States. He then opened Blockware Mining, where he would not only sell you the rigs, he would host the rigs for you. He started those companies from his hospital bed with cancer. He finished his MBA from his hospital bed with cancer. You can't ever tell me that the average guy is going to compete with him. He is going to bury you every time. He embodies American exceptionalism. He passed away last summer, and I run the Legacy Fund. But I learned he was 29. I learned so much from him about American exceptionalism, fortitude, perseverance. When you're sick, when you feel like shit, when you have 103 fever, you're dying of cancer. We're starting another company right now. That's what America's about. That's power. That's achievement. I don't think everybody can do that. And that's why we don't have equal outcomes. So I can only aspire to have, he drove me. I'm a driven guy, and he drove me like a dog. But that's what's possible. So a tribute to my partner and friend, Matt D'Souza. And his best friend is Sam Schwarzinski, who now is in here with me every Wednesday, building our blockchain fund out for the next 20 years. That's my conclusion, man. American exceptionalism, buddy.
That's freaking amazing, Jim. I love that. I love that story. I love that it's also having your environment, right? The people around you to help push you forward. And everybody here, if you want Jim around you, go check out Growth Stock Mentor.
One other favor, if you would post up on your site, that picture is Sam, Matt, and I on Father's Day last year playing golf. I just want people to see who he was. Just an amazing person. All right, I'm going to let you guys go. I'll keep you here forever.
Absolutely, Jim.
This is amazing. And just for people to know too, if you were jotting down a million notes just like I was, and you weren't able to get all the nuggets of amazing information from Jim today, we will be posting this on our YouTube page, Mara Wealth, next week. So you'll be able to view it that way, as well as on our podcast, the Traders Mindchat show, wherever, Spotify, Apple, you name it. So you get more of Jim there too.
You guys, thanks for the opportunity to speak. I really appreciate it. We'll do it again.
Absolutely. Can't wait.
It's so nice to finally meet you, Jim.
Take care, guys. Have a nice afternoon.
Take care.
Bye.
And thank you, everybody, for coming.
Everyone.
I knew Jim was going to deliver.
I have seen his interviews with you in the past, but I was just so amazed at how passionate he is about trading and about how genuine he is about really wanting to help people.
Yeah, and that's one of the things. The guy is uber successful and yet so down to earth, willing to help out and make sure that people get it. So blessed to have him on.
Oh, it was wonderful. I got so much out of this interview, but the two main highlights that I got was that you need tranquility in chaos. I thought that was so true, that you need to find that detachment from money. And one of the key ways that he does that is having a cushion, which he says is one of the most underrated tools in trading, that he can sit, he can think, and, he doesn't have to live on a razor's edge.
Yeah, the only way that you're going to get that cushion is to have that level of detachment, to have perspective, to give the stock room to run. Like, so buying it at the right time, allowing it to run, and then you have some wiggle room, you have options, and that's really important to have staying power in this game.
Absolutely. What were some of the highlights you got out of the interview?
Oh man, so many. One was that he battle plans at night, very Darvis-esque. So so many traders come to the market. They want to game plan right before the market opens, or even during trading hours, and that might be okay for some. But if you're game planning while the market is closed, then that gives you the ability to walk in fresh, with open mind, like you already know what you're going to do, how you're going to do it, why you're going to do it, potential scenarios that could happen, good, bad, or ugly. And so that's another great way to stay calm in the heat of battle. And the other thing, of course, is the Gandhi moments and Mother
I
Teresa.
love that. That was great.
Yeah, absolutely. And yeah, it's true for them. It's true for all of us. It's true for an individual stock too. A stock can have an off day where it's going to pull back. These things aren't going to go up every single day, right? Although sometimes in the moment it might feel that way, but yeah, it needs time to come back in and test something like the 50-day moving average, like Jim said, and then see where it goes from there.
This is great. And for all of the key highlights, please be sure to check us out on MaraWealth.com. And if you haven't already, subscribe to MaraWealth as well as to the Traders Mindchat show so that you can get more great episodes like today's interview with Jim in the near future.
Yeah, absolutely. We hope that you got a lot out of this show. Now take it and run with it.
See you next time. Bye.
Take care, everybody. Bye.